FOMC meeting tomorrow. What is Powell up to? Is it going to be a hawkish rate cut where they're going to cut and then pause for an indefinite period? We're going to be live streaming tomorrow at 4 p.m. Let's dive into the charts and see what you need to know. So here, I want to start off by talking about the S&P 500. What we have here is really the entire month of December has been an incredibly tight trade range. The daily implied volatilities have gone down to single digits. Market is winding up, waiting for something to move. But this has not been the case in the rates markets. And so, what has been going on in the rates markets over the last little bit? Let's start off with the SOFR futures. I want to highlight what we're looking at here is the market pricing in the Fed path and how many interest rates we're going to have cut next year, because we're looking at December 2026, and we're shaving off close to 25 basis points over the last few weeks. There's now the talk of that we're going to see a hawkish cut, which is they're going to cut interest rates and then take a break. And that is actually what the market is pricing in. Let's look at it from a probabilities perspective. What we have here is basically the Fed funds futures pricing in 87% that there's a rate cut coming tomorrow. So that's baked into the cake. But what is interesting is when we look at the first quarter of next year, the January meeting has a 67% probability, the most probable by far, that they do nothing in January, leave rates unchanged. Again in March, that they 52% probably the greatest probability that again they do nothing in that meeting. And again in April, even though it's much more balanced with a rate cut, it's still the most probable that they don't even cut in at the end of April. So we're talking about a scenario where the market is basically pricing in the Fed pausing for at least 4 months in there. And so that makes sense because if we got a new Fed governor coming in with Hackett, maybe they're going to leave it to Hackett to make all the interest rate moves, and they're going to keep things steady until then. At least that's what the market's starting pricing in. Now, that also has influenced the 10-year and the 30-year, the long end of the curve. What you can observe is that we've seen selling in the 10-year bond, and we've been seeing selling in the 30-year bond, especially in the last week, them completely pulling back from what was a very bullish trend in the market. So there is right now a bond market that is pricing in higher yields, pulling rate cuts out, and essentially leaving room now for potentially inflation risks and other things that these long bonds are starting to price in. So is the market getting this right? Is this what we're going to get? Odds are very good that the Fed will deliver what the market is now pricing in. So I do think that we're going to see that, but there's going to be a lot of other things that are going to be important. What will be happening with the Fed balance sheet, and are there concerns about repo markets? There's going to be little things that are going to be revealed, but to me, it's going to then lead to the jobs numbers, which is going to really decide whether or not the economy is contracting and whether or not the Fed really does have room to be more hawkish into the first quarter of next year, or whether they're going to leave rates or they're going to have to be cutting some more rates in that first quarter. Now, I actually feel that in the end, it will play out that they're going to be more dovish than the market is currently pricing in. But there is no doubt that we're going into this meeting and it's setting up this way, and the market is pricing that in. So what is it going to mean? Well, let's S&P 500 trading up here. We should see some volatility, but we are in the low volume period in these markets. going into the holidays. There will be a little bit of volume here in the next few trading sessions, but trade ranges have narrowed. Volatility is down. Maybe we get a 50-point S&P reaction on the Fed, but I don't think the big market move is here. Now, a month or two ago, we were concerned and a little bit bearish about the fact that the market could have that deeper correction. It ended up being just a 5-6% correction. I don't assign a high probability at all that there's going to be any market correction this year. Maybe in the first quarter of next year, we have to entertain risks. But odds are here that the real question is that will there be a bullish tailwind to the stock market from this, where the S&P is capable of breaking to a higher high and running? I feel the Fed meeting will play a little bit of a role in that, but the jobs number next week on Tuesday is going to be the real icing on the cake, where it's going to really decide what is happening next. And the last thing I wanted to just touch on is the dollar, because this is also going to be where we'll likely see the most immediate impact on an FOMC meeting. Now, we've been pivoting along this 50-day moving average, and we're asking a very critical question as to whether the bull rally in the US dollar has played its course. Now, we have seen 2-month period where the dollar has actually been above its 50-day moving average and holding up. Now, we saw a little bit of a dip here below this 50-day. We did a video on that just last week, but this FOMC meeting and the jobs numbers are going to decide this. And for me, there's still wiggle room for the bulls to save this, because the real falling off the edge of a cliff for the dollar, in my mind, is below the 98 level where the fib zones lie. On a weekly chart, if we started a path where the dollar is weakening below there, then that would be where this we could really see us head back to the 2021 lows on the dollar index. Now, do I think that this Fed meeting is going to give that kind of velocity to this? No, the jobs numbers might, but will we see the dollar weaken and show a period of sustaining below the 50-day? It may show a very important bias to us on that front. That's going to be some of the key things to watch. So we're going to be watching what the dollar reaction is. We're going to see whether or not the SOFR futures start to really show a hawkish Fed that is going to do far less rate cuts next year. How will the rates market and the stir traders price that in? It's going to be key. Will the long bonds, all the selling we saw here, is it justified? A lot of these reactions, we'll be talking about it tomorrow. We're live streaming just after the Fed tomorrow. Keep an eye out for it. We're going to give you all the reactions, what happened, what you need to know, what's moving. We'll summarize it all for you during that session. We'll see you all online then.